Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Caleb Silver, Editor-in-Chief at Investopedia for Financial Literacy Month, which of course takes place every April. For this segment, we are going to discuss how to choose the right investment platform for you. So Caleb, it's not just the kind of assets that we want to buy. We have to think about the platforms that we're getting into. Let's talk about self-directed versus robo-advisor.
Right, so we're talking about online platforms, either apps or desktop or software platforms where you can invest. And you know how popular they are these days. They've only grown in popularity because as an individual investor, as a retail investor, there's a lot of options out there for us to handle this ourselves. But you have to decide for yourself, what kind of investor am I? Am I self-directed? Do I want to make my own decisions, pick my own portfolios, build my own portfolios, do my own research? Or do I want it done by a platform that I trust? And we call those robo-advisors, sometimes referred to as digital investing platforms. You know who they are when you see them. They'll make a lot of those decisions for you. Once you plug in your goals, once you plug in your long-term plans, they'll help you make those decisions. They'll rebalance for you. They'll take care of the tax loss harvesting. So do you want to do it yourself, or do you want a little bit more help?
What about self-directed? What are the pros and cons?
Yeah, you got a lot of options, and you have to be on it. You have to make those decisions. You can't set and forget it and hope everything is going to be okay. You've got to pay attention. So at least once a quarter, where's my portfolio today? Am I invested in the right things? Do I want to be where I'm at? Do I need to move my money around? What are the tax implications? A lot of decisions that you need to make, and you got to rebalance because you just can't leave it. You got to make sure you're rebalancing at least a couple of times a year. So you have to deal with that. Again, you're on your own, no guidance, and there's a lot of features, so a lot of decisions you have to make there. Those are the pros and cons of being a self-directed investor, and it's a lot to think about. And if you don't want to think about it, there's the robo-advisor option.
What are the pros and cons of robo-advisors?
Yeah, again, a lot of these things are taken care of for you. So preset portfolios or ETFs that you're invested in based on your risk parameters, based on your goals, based on your age. There's that automatic rebalancing. You don't have to do it. The robo-advisor will do it for you. Very low minimum balances. You can get into a robo-advisor for just several $1,000s now. It's not like there's a big barrier to entry. And there's a lot of tools. It's not just investing. It is goals planning. It is, I'm going to buy a house. How much do I need to put away? So you can do a little bit more robust financial planning for yourself through a robo-advisor, and they'll take care of a lot of the work for you. But it's not that personalized yet. That's one of the drawbacks. It's kind of like one for a lot of the same size for different size investors, and there's less choice in the products that you can invest in. You can't say, I really want to own this stock. You're going to invest in the choices that they give you, and you don't really interact with human advisors that much. Sometimes self-directed investors with those platforms have access to a financial advisor if they need one.
How does one get started?
Yeah, you get started by picking what's right for you, making that decision of what's right, and then opening an account based on what your goals are and which type of account you want to open, and then connecting your accounts to that so you make it automatic. In either case, you want to make adding to your portfolio really easy. Either that's going to be self-directed, where you're adding $100 a month if you can to your online platform, or making sure you're making those contributions to the robo-advisor. So you've got to do that, but it's pretty easy to start. And also track what you do. Track your decisions. It's really important to journal what you do as an investor so you'll learn from your mistakes and also you'll learn from your wins.
Right, and if you just set it and forget it, almost like your 401k, you don't even realize that it's coming out. It's just something natural that you do. Appreciate the insight as always, Caleb. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.